Hello, everyone. Welcome back to SALT Talks. My name is Joe Aletto, and I'm the production manager of SALT, a global thought leadership forum and networking platform encompassing finance, technology, and geopolitics. SALT Talks is a series of digital interviews with the world's foremost investors, creators, and thinkers. And just as we do at our global SALT conferences, we aim to both empower big, important ideas and provide our audience a window into the minds of subject matter experts. And today we are thrilled to welcome Marlon Nichols to SALT Talks. Marlon is a founding managing partner at Mac Venture Capital, which finds the entrepreneurs building the future for the rest of America. He's a former Kaufman Fellow and investment director at Intel Capital, with an extensive background in technology, private equity, media, and entertainment. Marlon's unique eye for global trends and shifts in consumer behavior has helped him capture many high potential investments, which include Gimlet Media, MongoDB, Thrive Market, Fair, Listener, Maven, Blavity, Pipe, Wonder School, and other companies that reflect overlooked markets. He serves on the board of directors for Adjoa, Blavity Finesse, Kaufman Fellows Program, Listener, Riff, Sote, and Wonder School. Marlon is the recipient of MVMT 50's South by Southwest 2018 Innovator of the Year Award, a 2018 nominee of the Ad Color in Tech Award, Digital Diversity's Innovation and Inclusion Change Agent Award, was named PitchBook's 25 Black Founders and VCs to Watch in 2018 and 2019, was the Tech Week 100 winner, and was named one of Silicon Republic's 26 VC professionals spearheading change. He's been featured on TechCrunch, Fortune, Blavity, and NBC, and is adjunct faculty in entrepreneurship and venture capital at the S.C. Johnson College of Business at Cornell University. If you have any questions for Marlon during today's talk, please enter them in the Q&A box at the bottom of your video screen. And now I am thrilled to turn it over to Sarah Kunst, a friend of the firm and managing director of Clio Capital, to conduct today's interview.
Thanks, Joe. And thank you, Marlon, for coming. We're super excited to have you today, and we have a lot to talk about. So we have been friends for a long time, Marlon, and we have been in tech for a long time. But for everybody who has not known you for years and years, tell us how you got here.
All right. Well, first of all, thanks for having me. It was great to get the email or the call, and it's a pleasure to be here. So I am the product of an immigrant entrepreneur, my mother, who we're from Jamaica, and we moved here when I was about 7 years old, and I watched her move from a housekeeper and nanny to a beautician, to then owning her own salon and building that salon for about over 20 years. That salon essentially raised me. So with that, I did my undergrad at Northeastern University and studied management information systems. I was always interested in technology, and I thought that if I had a business degree, I could be helpful with my mom's entrepreneurial ventures. And so graduated and jumped right into the enterprise software world. I joined a seed stage enterprise software company right out of undergrad. And within a year was asked to move to the UK to help launch that company in the UK to serve the UK and Europe. 3 years later, that company was acquired by SAP, and I decided that I didn't want to be an operator. And so I shifted to the other side of the spectrum and pursued a career in consulting. And so I first worked with the Blackstone Group, doing kind of post M&A integration work. And then that shifted to more strategy consulting focused on media and entertainment. And so that was about a 5-year career for me in consulting. And it went pretty well, but I learned something about myself again, similar to kind of like the Goldilocks story, right? Too small, too big, you need something right in the middle. And so what was right in the middle for me was venture capital. So I decided to go back to business school to pursue a career in venture. I chose Cornell University. I became the CEO of the school's MBA-led pre-seed fund for the 2 years that I was there. And that enabled me to network into the venture community. I graduated with a job at Intel Capital, quickly became an investment director. They sponsored me to be a Coffin Fellow, which within that, towards the end of that 5-year period, kind of opened my eyes to the fact that I wanted to also be an entrepreneur, but within venture. So set out to create my first fund, which was called Cross Culture. We invested in 43 companies there. It's a very high performing fund to this day. And now we're on to our second fund, which we rebranded as Mac Venture Capital.
Awesome. Good. And so tell us about Mac. Tell us about Charles and Adrian, your partners there. I've known all three of you separately, and you have three of the most accomplished prior careers to coming together before coming together to start a fund. So give us their bios in their absence.
Yeah, and so I am probably the least interesting of all the partners. You heard my background. I mean, Charles King was a Hollywood super agent when he was with WME. I mean, he managed the careers of folks like Oprah Winfrey and Tyler Perry, um, Michael B. Jordan, Ryan Coogler, etc. And then branched out to create his own media company with a focus of making sure that Black and Brown folks had more representation, better representation on the big screen and on the major streaming platforms. And that company is called Macro. And then Adrian was the fifth mayor of Washington, D.C., right? So, I mean, DC, some could consider it a state, so he might as well be a governor. And after leaving office, got tapped by Mark Andreessen to help create their regulatory practice, working with companies like Airbnb and Lyft, et cetera, helping them figure out how do you navigate government and regulatory agencies to build amazing companies. And then our other partner, Mike Palank, who's also a WME agent and worked with Charles at Macro for a while, also took the helm as acting CFO and CEO of a couple of startups himself. We just have it's an interesting DNA because we have such varied experiences, but we get along so well and see the world in such a similar way that it just works. But those varied experiences helped us to create some really valuable relationships across a number of industries that we can then leverage to help our portfolio companies grow.
Yeah, absolutely. That's amazing. So, you've been an operator and an investor, and have sort of had a close-up look at entrepreneurship from your mom your whole life. Do you love VC? I know that some of us are sort of in it to maybe change it a little bit. So tell us what do you see as the pluses and minuses of our industry?
Yeah, I like what I do, honestly, and it took me a while to get here, right? Just the mindset that I wanted to be a VC, and the things that attracted me to it, or what I was looking for in my daily professional life was, one, I wanted to be around cutting edge technology all the time. I wanted to interact with super smart people that are very creative, and you find that in most entrepreneurs. I also wanted to engage with companies at strategy at the strategy level, and I wanted to have some real skin in the game, right? So with consulting, you can get a lot of that stuff, but you have no skin in the game. With venture, you're tied to this company for 5 to 10 years, maybe sometimes longer, right? And so I did find those things. I find those things every day. I meet interesting people every day. I'm introduced to just provocative technology and interesting solutions to real problems. And so I absolutely love what I do. Can the industry change? Absolutely. There's not enough diversity in the industry, not only racial, gender, and thought. We can get better on all fronts, and I think we need to, in order to really realize the financial benefits that we all want to see. As an example, you think about underserved communities and some of the challenges that those communities have seen over years, decades, and the fact that if you apply technology to some of those challenges, we can solve them. And those represent billion-dollar opportunities. We've invested in some. And unless you have a diverse team, investment team to identify those opportunities and then to screen for the right founders to solve those opportunities, you're going to be sitting on the sideline while these remarkable things are done or created.
Can you tell us a little bit about Coffin Fellows, what it is, all of that?
Sure. So it's a 2-year fellowship in venture capital, global fellowship, and it started out as wanting to basically introduce talented people to venture capital and get them started in the space. It's evolved over the years to an organization that can help existing venture professionals become better venture professionals. And we do that through connecting to a pretty significant global network of the who's who and the who is emerging in venture capital, as well as teaching some of the key traits that I think make for great leaders, right? How do you diversity, as I mentioned, right? Why is that important? Why should you embrace it, right? And so part of why I was so excited about joining that board is because now I have an opportunity to really shape what the venture capital community looks like going forward.
Yeah, that's so important. And we're very glad you're there. So you and I talk about this a lot, and we're in conversations a lot about this, but what does the funding landscape look like, for Black and Hispanic fund managers, and then also for Black and Hispanic founders, right? So especially this year of sort of, reliving the 1960s when it comes to the civil rights movement, it feels like, have there been changes? Like what are you seeing right now?
Yeah. It's it's tough, right? It continues to be tough. However, I think I'm seeing some chinks in the armor. There's some folks coming around and starting to realize that you're missing out on some possible exponential return opportunities. As LPs, as you call it. You know, the I guess the CIO was at Yale just made a statement recently advocating for the need for diversity. Years past that never would have happened. We're starting to see a lot of endowments reporting their diversity numbers, et cetera. So diversity has always been an interesting thing because it ebbs and flows. At times it's very top of mind, and then it goes away, and then you rinse and repeat over the years. And what I'm finding this time around is it seems to be sticking. A nerve has been struck, and people are digging in and seeing the value, not only the social value, but the economic value of diversity. And that's going to lead directly, the more capital that goes to diverse fund managers will directly affect the number of diverse, and when I say diverse, I mean Black and brown founders that receive capital, because it's human nature. We can, try to game it all we want, but human nature is to work with, to be friends with, to spend time with people that resemble you in several ways, right? Whether that be you just look alike, or you went to the same schools, or you grew up in the same communities, or you summered in the same towns. Like whatever those things are that that make you feel similar and comfortable, that's what you're going to gravitate to. And so the more fund managers of color that that we allocate, or that LPs allocate capital to, that means the more people that look like them and have shared experiences with them will receive funding dollars as well.
Yeah, I totally agree. Awesome. Well, be sure to drop your questions in the Q&A. Also a great opportunity to pitch Marlon. He's a captive audience. So Marlon, tell me, what can allocators and investors do, right? Like you just said, it's super important to back more diverse fund managers so that, and diverse investors, so that more diverse people get funded. But what can allocators and investors do to be better at both attracting to hire as well as funding diverse talent? So you worked inside of Intel Capital, and I've done the same thing. I've worked inside of large funds that aren't particularly diverse until we show up. So what's the key to attracting that talent, and then what's the key to funding it?
Yeah, I don't think it's any different from any other industry, right? You can, if you put the word out that you are for, recruiting diverse talent, then you'll get the applications, and you have to be open to receiving them and truly, truly vetting them, right? But then it's about creating mm, a a community, a culture where they feel comfortable, right? So there's been a lot of talk about the tech industry and the woeful diversity numbers, and Fang does not have a hard time recruiting people of diverse diverse talent in. They have a hard time retaining them, right? And that's because you're asking them to assimilate to a culture that doesn't quite fit all of their needs or considers their needs. And so a big part of it is retention. If you let folks know that if you're a venture firm or you're you're a fund of funds or whatever, and you are recruiting, you are going to get diverse candidates to apply. You got to pick the great ones, and then you have to create an environment where they can actually feel comfortable at home in and thrive in.
Yeah, I totally agree. I couldn't agree more. Amazing. So what do you invest in? Tell us about, the fund, and especially your kind of areas of interest, and focus and thesis, and what you're excited about right now, especially in this kind of crazy COVID time, stage, sector, all of it.
Sure, that's a big question. Um, um, so I'll start with our thesis. We coined it cultural investing, and for us, culture is the proxy for human behavior. And so essentially, what we're doing is we're trying to identify emerging behavioral shifts, right, that are global in nature, and then doing a lot of research to figure out whether those shifts have stay power, or put another way, can become a part of social norm or pop culture. And the belief is that pop culture drives everything in our society. So it's kind of like the equivalent of having a crystal ball, right? If I can see where people are spending their time and money today, and I can see where people are going to spend their time and money in the future, and invest there, then essentially I'm investing in tomorrow's next great companies. And so that's the crux of our thesis. There's a lot of technical stuff that goes into that, but I won't bore everyone with that here. And then in terms of the areas that we invest in, well, the stage is seed stage, right? So it's usually we're a part of the first kind of institutional round of capital that a startup is taking in. And we typically write checks, initial checks up to 1.5 million, seeking to get about 10% of a company at that stage. And there's 6 areas that we've traditionally invested in. Commerce, which is leveraging the internet and mobile to sell products and services, and marketplaces are kind of a subset of that. I love investing in very differentiated marketplaces. Fintech is another area, and the focus here is really about the under and unbanked, and how do you move them or bring them onto the digital economy. And then health, or digital health, which is the kind of convergence of telemedicine and traditional medicine, with the intention of fixing healthcare in the U.S. So driving down costs, driving up efficiencies by leveraging technology. Immersive reality, and this is AR, VR, et cetera. But for now, the focus is intently on enterprises and how that technology can work and solve real problems there for businesses. Media and entertainment, we have a lot of media and entertainment DNA. But what we're doing there is less around content, more around finding new and differentiated distribution channels and platforms that can aid with the efficient creation of new content. And then regulatory, which really plays into Adrian's background, where we're looking for companies that are building terrific game-changing solutions, but that will bump up against the status quo, and we'll need help from our government allies, et cetera, to make it work. So those are the 6 areas that we typically invest in, and we lean heavy on the software side. We never say never in terms of hardware, but software is definitely our bread and butter.
Awesome. That's so cool. And so many things. What are some of the companies that you've invested in that you're super excited about kind of in this moment, or just in general? I hate when people ask me this question, so I'm going to ask it to you.
Which baby is your favorite baby?
Exactly. The one that's the answer.
Yeah, there are a number of them. Probably the hottest company in our most recent portfolio is a company called Pipe. And Pipe is kind of solving the friction between enterprise SaaS companies and their customers in terms of when you get paid, do you need to do subscriptions, et cetera. And it's also created kind of a new exchange that allows these recurring companies with recurring revenue to basically fund their growth based on those recurring those contracts, essentially. So it's a company that's growing very, very, very fast. It represents already in less than a year a 10x markup in our portfolio. So we're excited about that one. Another company in the media and entertainment space called Riff. They're basically using three-dimensional AI technology to do kind of dynamic and contextual product placement into film.
That's amazing. And I know that your partner, Adrian, is very excited about one of your probably most well-known on Instagram ad companies, Nugs. And I won't lie, I'm not a big chicken nugget eater, and I'm not a big like meat replacement eater, so I haven't yet had them. But so many of my friends are like obsessed with them. It's like Supreme, if Supreme made chicken nuggets. So tell us a little bit about that one, just in case people have not yet heard.
Yeah, so that deal unfortunately was done before we got together. So that was a kind of one of our legacy portfolio companies. So I don't know a ton about it, but you're right. Every chance Adrian gets, he's posting about Nugs, and their social media marketing game is just unmatched. So, but yeah, I think you gave the highlights of it.
Yes, it is. If you're looking for meatless chicken nuggets, Nugs is your food. So tell us, how can founders make themselves more investable and easier for investors to back? I'm sure you're like me and look at hundreds and thousands of companies every year. And, there are probably tons that, like, if they just kind of or like 10% better at the pitch or the email or the whatever, right? We might be able to dig in and find a gem. But I know for me and maybe for you, I know I miss stuff because the founders just, what they're building might be amazing, but the way that they're telling me the story, I just sort of missed it.
Mm-hmm. Yeah, so one of the things, going back to the diversity conversation, right? One of the challenges is how do you get in front of these investors? So, and it's not always fair, right? Because you may come from a place, or your network is very different from that of the folks whose attention you're trying to get. And so we have a channel on our website where any entrepreneur can reach out and fill out a quick form, give us their deck, et cetera. And we commit to reading every single one of those as a team and following up with the ones that make sense for us, right? So that's just something that we're doing to make it easier for all founders to get access to us. Not everyone's going to get a favorable email back, but everyone's going to get a review and a response. in terms of what founders can do, I think it's two things. One, it's research, right? So you definitely want to, well, introspection and research as a pair. So really understand, what type of company you're building, the scale and scope of it, right? And then, doing the research to find out which venture funds or investors fit with that, right? So it doesn't make a whole lot of sense if if someone's focused on enterprise companies only, and you're a consumer company, for you to be reaching out. That's probably not going to be a good fit, right? Square hole, round peg, whatever. So do the research. There's so many investors out there, and be deliberate and about who you're reaching out to and when. And then the other thing I'd say is follow their process. Like, a lot of folks will tell you how they want to be, uh, you know, reached out to, or how they prefer to connect. Right? Some folks like just connecting on social media and doing it that way. Some folks like to receive emails. Some folks like for you to just submit your stuff on their whatever channel they have for you to submit it. Some folks like LinkedIn, right? So you figure that out through your research and just follow that direction.
Yeah, I actually say on my LinkedIn, instead of like my bio blurb at the top, do not reach out to me on LinkedIn to pitch me. Please go to cleocap.com. And multiple times a day. And it's funny because the reason I say it is just because LinkedIn isn't a great tool for it. But then I'm like, oh God, like I'm thinking about entering into a like decade long relationship with this founder that's like harder to get out of than a marriage. And they like couldn't read my only single simple request. And like candidly, never say never, but it makes me nervous about investing about those founders, because I'm like, it's so hard to run a company and there's so many things that are so hard to get right, that if you can't get like those early basic obvious, I am telling you in all caps, please, this is how to reach out to me, right? Like, what am I in for?
Yeah, I mean, we all have our little tests to see, who should get the time, et cetera. But yeah, it's just I'm less annoyed by it, and think of it less as a signal. It's more so you probably just won't get my attention.
Yeah, yeah, that's a great way to reframe it. Look at you. That's what my therapist would say. Exactly. Why give these people your attention? That's a good point. So, if you're listening, you're wondering how to get in front of investors, the preferred method is usually not a bad place to start. If anyone has questions, drop them in the Q&A. Joe, if you have a question, feel free to jump in as well. But otherwise, let's just kind of keep chatting. So. One thing that's come up a lot this year is people are asking how the pandemic is sort of impacting investing. As a really early stage investor, I've generally said I don't think about it a ton because there's an acceleration in trends, but the companies I invest in are pre-seed, so they're still going to be getting started years from now when we're hopefully far past COVID. But has it changed how you invest, or how has it made you think about investing?
It hasn't changed how we invest, because so we have the fortune of being a little bit downstream from you, right? So our sweet spot is, they have a viable product and they're starting to get some feedback from the marketplace, right? So we have some data that we can look at. In terms of COVID, I guess the only additional thing that or the thing that it puts a little bit more emphasis on is, can this company perform in downturns as well as upturns, right? And if it can't really perform in a downturn, like, how much risk does that add to the equation, right? So we're looking at that. But we found in general, a lot of people have said this, COVID has proven to be an accelerant, right, of trends. And we talked about our thesis, which is all about like behavioral trends, right? So a lot of the stuff that folks are learning about now, we've already studied and have been investing along those lines, right? Like, we have a pretty significant digital health portfolio already in place that's already appreciating, right? And rinse and repeat, right? So it hasn't had an adverse effect on our portfolio um, to date. And then in terms of meeting companies, um, that's a little bit different, right? Because you do the, oh, let's go grab a drink and let's get dinner or lunch. So you can catch folks in a moment where they're letting their hair down. Um, and it's a relaxed environment. You have less of that now, right? So one thing that I've been doing with the companies that we've invested in is you'll get a random phone call and text message from me, and we'll just jump on a FaceTime on, like, I don't know, 11 a.m. on a Saturday, like, just because, right? And not talk about the deal or anything, just talk, right? So I can get a sense of who you are, and are you someone that I want to spend time with for the next 10 years. So you do things like that, and way more reference checks now and blind reference checks, because you have less face time.
Yeah, well, more FaceTime, the app, less FaceTime IRL.
Yeah.
Awesome.
Yes.
And
Yeah.
so how has that changed on your side? When you guys go out and fundraise, right? Because we go out and raise money from a lot of other people, so we have money to invest. What has that changed during COVID? Has it changed it during COVID?
Yeah. So we're able to have a lot more meetings, right? Because, in the past, you'd have to, like, schedule the in-persons in Boston, Chicago, New York, and I live in LA. And, now I can have all those meetings in one day, right? So it kind of condenses the process for us a bit. But then, on the flip side, you do have, we have seen one or two, endowments and pension funds that are like, we absolutely need to meet in person. That's a part of our process. And so then you have the difficult decision, like, do I fly to Boston and have this conversation, or do we just take a pause on this one and see how things pan out. Yeah, fortunately, I have a partner in Adrian that's not afraid of getting on planes.
No, he's
So
not.
we can send him.
So to actually talk about that a little bit. So Adrian, splits his time bi-coastally. You're in LA. He spent some time in San Francisco. A lot of the team's in LA. What do you think the future of work, both for VCs but also for startups, looks like? Like, are we just going to be disembodied heads in different Zoom rooms forever, or what happens post COVID?
Yeah. So I'll start with us. We're definitely gonna, keep our office and all that stuff, right? We actually share space with Macro, the media company, which creates a really interesting vibe when you're blending, startup founders, entrepreneurs with creatives in the entertainment industry, right? Some really cool and unique things happen that way.
Come to your office.
So yeah. Wait till you see the new one.
Oh, I need to come hang out. I just want to meet Oprah. I love it.
Yeah. So that's cool. So we're definitely going to maintain that. But because our team has been kind of split between LA and the Bay Area, and as you said, Adrian's back and forth to the East Coast, we've always had like the remote procedures in place, right? So our partner meetings have always been virtual, right? Or partially virtual. Some of us in one office space and others wherever they are. And so we're set up for this essentially. What I've been hearing from portfolio companies is that for the foreseeable future, they're probably going to be fully remote. But longer term, there's probably going to be a satellite office wherever they consider their main hub to be, where people can kind of go to at different points, throughout a year or whatever. But for the most part, I think people are comfortable with being remote and gaining access to, like, great talent from wherever. Don't have to worry about convincing them to move, or dealing with that stuff. And I think everyone is getting more and more comfortable with remote work, right? And being able to build a corporate culture remotely.
Yeah. So if Oprah is not likely to show up at your office, you probably don't need one. I got it. So we have a great question from TJ. What kind of international investment footprint would kind of make you consider investing? So do you guys, will you invest outside of the US? How do you think about that? What goes into that conversation?
Yeah. So when Joe was reading my bio, he called out two companies that are Kenya-based, Ajua and Sote. Both are uh, Delaware um, domiciled or incorporated, but they operate in Africa essentially. And what what we're looking for in offshore investments is one, who's a local investment partner that can be in the journey with us, because it's that's a long plane ride. And also I don't know everything that I probably need to know about the local environment there, the culture, the economy, etc. So you need a co-traveler that understands that. So we tend to get in with very strong local investors. The other thing is, can this be a product that is not solely for that part of the world? Can it can that product come to the US or go to Europe or wherever and still be successful? Is it a global in nature? And then obviously the founders, right? So do you trust these founders? Are they the right people to build this company, wherever it is in the world, essentially?
Yeah, awesome. And do you invest in companies? I think you covered this, but do you invest in companies that don't have a US presence, like that don't have a Delaware C Corp? Because I know for me, I don't care where you're building, I just have to wire money to a US bank account.
Yeah, I just need to be comfortable with how the company will be, which laws the company is going to be
Yeah,
governed by.
exactly. As long as we can settle it in California court, like game on. Yes.
Yeah.
Awesome. And then Stephen had a great question. What's the biggest difference between Intel Capital and being on your own?
Yeah. So, by the way, my 5 years at Intel Capital were amazing. I learned a lot, and worked with some phenomenal people. The greatest difference though is that it's a corporate VC, and so inherent in that is that the investments have to be strategic to the company, right? And Intel was great because it's an ingredients company, so strategic meant a lot of things, right? But there was still a universe of products and companies that I couldn't invest in, and because they just didn't fit with the roadmap for Intel Corporation. And so I think that's the biggest difference with being a financial VC versus a corporate VC. It's the strategic mandate.
Yes. Awesome. I think we're almost out of time. So I just have one kind of last question for you. It's far too sort of rare, I think, that conversations between two VC investors are two Black people, right? And even more so a woman. And so, how do we make this less rare, right? You talked a lot about kind of the tactics, but like, is there like any sort of like one piece of advice or like one thing to leave of like, how do we make this like the status quo instead of like, a lot less common than it should be?
I think just being more, we talked about the funding part of it and what, LPs need to do. But us as GPs, like we just need to help each other, right? So whether that be around fundraising, sharing information about LPs that invested or didn't invest and why, that was the case, making those introductions. If you get a speaking opportunity that you can't attend, like who can go instead of you, right? That is also Black, that is a woman, not also, that is a woman, right? So it's just about putting each other on and truly being co-travelers and allies.
I love it. And I also love allies like Salt, who've done an amazing job with bringing me on to have some of these conversations. And I think that that's a huge part of it as well, because as they say in Africa, it takes a village. So with that, thank you so much, Marlon, for coming on today. And thank you, Joe and Salt, for having us. Marlon, if people here want to pitch you, where do they go to do it?
macventurecapital.com/contact.
Amazing, amazing. So go find him there and leave his LinkedIn alone. Awesome. Thank you so much, Marlon, and thanks, Salt.
Thank you. This is great.
Well, thank you both. I mean, it's truly a privilege to bring conversations like these to the SALT platform. I have a personal stake in bringing diverse conversations here as a member of the LGBTQ community. I don't see myself in these conversations usually. I don't see myself in finance. I'm one of two people at Skybridge, a very welcoming firm, who are out. So thank you all so much.
Thanks.